This is Horizon's Middle East and Africa. Our top stories this morning. We have potentially a Fed chair nominee. Warsh tipped Bloomberg understands the Trump administration is gearing up to nominate Kevin Warsh as the next Fed chair, with the U.S. president planning to make an announcement on his pick later today. Apple delivers a record quarterly sales and a better-than-expected forecast as iPhone sales and a comeback in China drive revenue. And oil tumbles following a three-day rally as traders watch President Trump's shifting messages on a possible U.S. attack on Iran. Happy Friday, everyone. I am Jennifer Zapasaja in Johannesburg, in for Jumana Bersechian. Quite a busy day for us today. It's been quite a busy week for markets to digest all of the news, and this last trading day of the month is bringing no shortage of that, from the next Fed chair to an averted government shutdown potentially in the U.S., as well as increased tensions in the Middle East, and of course, tech, which has been a major theme throughout the week. And that's where I want to start today. NASDAQ futures looking marginally down, just about 0.5% in early trading today. And still investors are questioning a lot of the discussions around AI spend, especially after we got a number of the mega cap companies reporting this week. The latest coming, of course, on Thursday from Apple. On Thursday, we did see the NASDAQ and most of the major indices in the U.S. dragged down by tech. So still quite a major theme for indices across the U.S. Let's bring your attention to the U.S. 10-year yield as well. We are seeing yields up. Right now, the U.S. 10-year yield up just about 0.3% to trade at about 4.2652. Now, we mentioned this at the top of the show. Markets really paying close attention to who is potentially going to be this next Fed chair pick. We're seeing reaction across major assets. Of course, we are seeing that with U.S. Treasuries, as well as a stronger dollar on the day. But still, we are waiting for that official confirmation from President Trump later today. Gold is also on the board there. We've been talking about gold's record-breaking rally, but as you can see right now, down just over 3% there. And now we're also seeing a lot of that in reaction to potentially a stronger dollar, potential Kevin Warsh as the next Fed chair, filtering into a stronger dollar, and that having an effect on precious metals more broadly. But still, we're seeing gold above $5,215 an ounce there. And just lastly, we have Brent crude on the board there, pulling back to start this early trade, down just about 1.37%, reversing some of the gains that we saw earlier in the week. But still, we should mention that Brent is on track for its best month since July of 2023, which might be surprising for many people because we started 2026 with some of these concerns about oversupply, that potentially being overshadowed by some of the geopolitical tensions that we've been talking about over the past few days, from Iran and, of course, Venezuela earlier in the month, and still Kazakhstan. Notable, though, that we will see an OPEC plus meeting over the weekend. But Brent crude at about $69.74 a barrel there. And really quickly, I just want to bring your attention to this terminal chart, and that is, of course, the poly market odds bets for the next Fed chair. As you can see there, Kevin Warsh is leading for that potential nominee. And what we actually saw overnight, as we did get that commentary from President Trump, we have seen the poly market odds for Kevin Warsh rising above 80% on Friday, as support for previously Rick Reeder had faded quite a bit. So still waiting for that official announcement to come from President Trump. Let's, though, check in on how markets in Asia are faring. Min Min Lo is standing by in Hong Kong for us. Min Min, quite a bit of red on the board behind you. Walk us through it.
Yes, Jen, that Bloomberg scoop today about a potential naming of Kevin Warsh as the next Fed chair really moving markets. We see the dollar rebounding, as you said, the precious metal rally also unwinding here, and it's taking a beating on some of these mining stocks in Asia. Gold mining stocks down by as much as 13% in Hong Kong and China. But what else is the big story overnight is also the Apple earning, really beating it out of the park when it comes to the quarterly earnings. And some areas are saying that maybe it is also a victim of its own success because it is driving up demand for the NAND memory chips. Supply is in shortage, and that could drive up costs and potentially cut into margins as well. So if you take a look at some of the Apple suppliers in Asia, looking pretty mixed at the moment, with Honhai down about 1.3%, but some of the NAND memory chips makers like Samsung up by about 1% today.
All right. Thanks so much, Min Min Lo in Hong Kong. For us, we'll check back in with you in just a bit. Let's turn back to our top story. Bloomberg has learned that the Trump administration is preparing to nominate Kevin Warsh to be the next Federal Reserve chair. Earlier, President Trump said he plans to announce his pick on Friday morning.
What day will you be announcing your Fed chair pick next week?
Tomorrow morning.
Tomorrow morning. And do you know?
I'd rather say it tomorrow, but just an outstanding person and a person that won't be too surprising to people. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so.
So
I mean,
someone who was on your short list, sir?
On my reasonably short list, yeah.
For more, let's bring in Bloomberg East Asia government editor, and that's John Herskovits in Tokyo. John, what would it mean if we do actually see Kevin Warsh as the next Fed chairman? And I wonder how that fits into what we've been hearing from President Trump over the past few months, which is he wants to see rates lower.
Yeah, I mean, with the appointment of Warsh, we're going to see, it signals that the Fed is going to be moving towards rate cuts. Now, there's some ambiguity about how fast and how far the Fed is going to go. Warsh served as a Fed governor before and was seen as a bit of an inflation hawk. But in recent months, he's come around more to Trump's tune, vocally saying that he sees rate cuts as something that should be done. But he doesn't really fit the bill, doesn't check all the boxes for Trump. He's not in the MAGA establishment. He's not seen as a Trump loyalist. So this could set up some conflict down the road about following Trump or the Fed's independence. For the markets, we've seen a short-term reaction, stocks turning lower, yields on treasuries going higher. So there's a bit of a negative reaction in the short term, but over the long term, markets have seen the guardrails as likely holding, that the Fed would retain its independence. And so long term is looking at this cautiously, but no huge reactions. The next big test is the Senate for confirmation. We've had some words from key senators on the Republican side that they see what's going on with Fed Chairman Powell now and the Department of Justice investigation as something that really needs to be cleared up before they could approve the next nominee. And also there are going to be questions about how independent the nominee from the Trump administration is going to be. So the test for the Senate's coming up. We have a lot that's going on, but we'll get a lot of clarity tomorrow when the name actually comes out.
Yeah, of course. Markets keenly waiting for that. John Herskovits, Bloomberg's East Asia government editor. John, thanks so much. Let's dig into this even more, further insights into Fed policy outlook. Let's bring in Rajeev Sibal, Morgan Stanley senior global economist, who's joining us from Dubai. Rajeev, thanks so much. Let's just continue this conversation. Prior to this announcement from President Trump, you had noted potentially supporting 2 rate cuts in 2026. If we do potentially see Kevin Warsh as the next Fed chair, do you still stand by that conviction?
Yeah, our general view is that the new Fed governor is not going to dramatically change the composition of the Fed and the votes. I mean, as we saw in the last meeting, there were 2 dissents, and one of those 2 dissents is likely to leave the board. And so if you put in a new member, even the chairperson, you're not necessarily going to get more than 2 dissents. I think the Fed will remain data dependent. As you mentioned before, Kevin Warsh has a track record. He's been on the board before. He's an established economist. He's somebody that we can look at his thought process and understand how he may react to the data that's coming through. So we will retain our call. We continue to view June and September, which is similar to market pricing, as the next timing for the move for the Fed. And that's largely data dependent because that's when we see inflation starting to cool off a little bit.
So if you take a look at some of the other contenders, though, does Morgan Stanley still stand by that consensus, even if we do see potentially a Rick Reeder moving up in the odds?
So, I go back to my first comment, which is that we have one member of the board that's leaving, and that was one of the dissents, and we have a new member of the board coming in as the chairperson. So maybe they're a dissenter, maybe they're not, but either way, you're not necessarily going to have a huge dramatic shift in the votes based on the data that we see ahead of us. If the data changes, obviously the board will react. I mean, we saw in the back half of last year, the board had to adapt and react to different composition of data based on employment, non-farm payrolls, and inflation. But all of the governors that are all of the names that are being suggested to take the seat are fairly conventional, I would argue. They're names that we have an understanding of how their thought process is with regard to how they view the economy. And so for us, it's going to be the data that drives any change in decision.
Let's dig into the data, though, because, Rajeev, we did get the pendulum swung a bit with the U.S. trade data from October to November. Do you have a clear read on the direction of the U.S. Economy right now?
So the economy is growing quite strongly. I think where the debate is really around where employment is within that context and where inflation is going within that context. And we've been writing a lot about the different scenarios that the Fed could face over the next 1 or 2 quarters. We have to remember we're still absorbing data that came out that was from during the government shutdown. And so there's still some noise and volatility in what we're seeing. And so over the next couple months, we'll start to get a clearer picture. But what we can tell thus far is that the U.S. economy is growing fairly robustly. And the question really becomes about whether or not inflation will roll over and come off in the middle of the year, which is our baseline call, and I think kind of where the market is sitting as well. That is driven primarily by tariffs starting to come out of the system in terms of a year-on-year comp, and we start to get inflation heading towards that 2.5 level, which is where our forecast is towards the end of this year, from the 3 level, which is where we are currently. That would need something to shift if it were to change the path of the Fed. And so if inflation were to stay sticky, perhaps because inflation rises as demand accelerates, that could be a scenario where the Fed would have to think about whether or not they would be cutting further. Alternatively, if you get a world in which AI productivity really steps in and you start to see an extension of the productivity gains we started to see in the last couple of quarters, that's a world in which the U.S. economy grows robustly, but inflation comes down. And so these are the things that we'll be looking for in the next few data prints, and we think the Fed is looking for these signals as well.
Rajeev, I also want to talk to you about another major theme of the week, which has been potentially FX intervention risk as far as the dollar is concerned, and also the yen. If we look at Japan, you say that Japan's debt remains sustainable. Do we start to see potentially some of the moves play out in the FX space, more fundamental moves as opposed to geopolitical?
Yeah, I mean, that's what we're expecting, and a lot of our Morgan Stanley forecasts are really anchored on the fundamentals, as you highlight. We had made an argument in the Japanese context that through analysis we've done in the past that Japanese debt is far more sustainable than one might suspect when you look at the level of debt. And that's because the interest rates are so low that the debt is quite easy to service, and the government runs a fairly balanced primary fiscal. And so as a result, we viewed some of the speculation in the past couple of weeks as perhaps overdone. And indeed, we've seen the 30-year JGB come back in. I think as geopolitical tensions calm down, as we have clarity on the new Fed governor, as we have clarity from the Bank of Japan on their path, which we got some of last week when we had the last meeting, it will help fundamentals reassert in the FX markets over here in the next few months, hopefully.
Yeah, and we're seeing there the Japan 30-year yield down to about 3.6 there. Rajeev Sibal, Morgan Stanley Senior Global Economist in Dubai. Rajeev, thanks so much for your insights this morning. Now, coming up, Apple delivers an upbeat forecast, but the market reaction was bruised by a rising cost warning. We have the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Apple has delivered an upbeat forecast after reporting record quarterly sales. Apple shares fluctuated in after-hours trading, finishing 0.5% higher. Bloomberg Tech Asia co-anchor Annabelle Drewlers is joining us now from Hong Kong. So, Annabelle, iPhone sales were definitely a highlight for Apple in these results, but where did you see some of the weak spots for the company?
Yeah, I think if we talk about 1 weak spot, it would probably be around what the company indicated for memory chips, because we're seeing a shortfall essentially, or shortages across the memory chip space, and so that is hitting a lot of different smartphone or PC makers as well. So Apple is saying they didn't really see any impact in the first quarter, but going into the second, that's where you actually might see it affecting margins essentially. But taking a look across the board, I mean, another area of weakness, for instance, was wearables, but in aggregate, this was very, very strong figures for the company because it was a massive holiday quarter, at 23% year-over-year growth for the overall business, $85 billion in smartphone revenue. So lots of customers really liking the latest refresh lineup, essentially, of the iPhones. What else was interesting to watch in the numbers was where they had particular success in the emerging markets. So India, for instance, we saw them strong growth there, very strong as well in China, because we saw iPhone revenue actually, or revenue overall, topping $25 billion for the first time in several years. So really good numbers. I think, again, going back to the weaker spots, so we had memory chips, we had, certainly concerns as well around AI, and maybe these results bought the company just a little bit of time as they try and build out their AI efforts, because we know, for instance, they're planning to work with Google Gemini to power some future AI features. That's after their really in-house efforts have sort of fallen flat, but they still really need to figure out the evolution, because Apple has been behind in the AI space generally in integrating those types of features into their products as well.
And that's been the big question throughout the week for a number of these companies. Let's turn to Microsoft, though, Annabelle, because the company had one of its worst days on record following those results earlier from the week. Was this all due to the poor performance of its Azure business? How are you reading into this?
Yeah, it's really quite an outsized reaction, I would say. Just in terms of the value destruction, I mean, it was $357 billion in market cap that was erased. It's the second biggest for a single session in stock market history. The only one that's been worse was NVIDIA following the launch of DeepSeek, the Chinese AI play or AI model last year. So huge amount of value erased, closed down 10%. That's the biggest loss as well, going back to March 2020. So you're back in the COVID era, of course. In terms of why, yeah, exactly, that's it. It was really down to the Azure business. And just to recap some of the numbers, because actually the growth came in line with estimates. It grew in the latest quarter at 38%. That was the just a sort of meeting analyst expectations. What is interesting, though, was that it was a 1 percentage point decrease from the quarter prior, from 39 to 38%, and essentially the company has been really punished for that. It is a concern, of course, because if you do have that Azure business that's slowing, but at the same time they're rising on their capital expenditure. Capital expenditure has been one of the biggest focus points of earnings over the course of this week, just that we've seen companies like Meta, also Tesla, Microsoft pledging to increase their capital expenditures over the course of 2026. I mean, that is sort of the key concern. But it'd be interesting to see if you get that recovery in the session today, given it was very much a big sell-off.
Bloomberg Tech Asia co-anchor Annabelle Drewler's in Hong Kong there. Annabelle, thanks as always for your reporting. Now coming up, President Donald Trump's latest warnings to Iran have fueled a spike in oil prices. We'll have all the details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Oil prices tumbled following a three-day rally. Brent retreated below $70 a barrel after climbing above that level in the previous session for the first time since July. Brent remains on track for its biggest monthly gain since July of 2023 on President Donald Trump's escalating threats against Iran. Trump says he has had discussions with Iran.
We have a lot of very big, very powerful ships sailing to Iran right now, and it would be great if we didn't have to use them. Okay?
Can you say what the message was that you shared with Iranians?
Well, I told them two things. Number one, no nuclear, and number two, stop killing protesters.
For more on this, let's bring in Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia, joining us now from Dubai. Stuart, is a U.S. strike on Iran still a possibility here, or are we potentially looking at a diplomatic off-ramp in the near term?
I mean, I think certainly both sides will be looking for that off ramp, but I mean, yes, it is clear that it is still very much a possibility, and given the scale of the build-up that we've seen both on the water and on land in the region, effectively the US administration is giving itself, a series of options for military intervention if it feels the need to. Now, is it a done deal? No, absolutely not. And it's clear from those comments we just heard from the US president, he's set sort of a couple of things on the agenda there that he's hoping they can get a deal on. Whether they can do it fast enough in order to avert military action, I think that's the big question.
Well, and Stuart, that's really why we're seeing some of the price action right now in energy and also potentially in precious metals. Can we talk about what we heard from the European Union, which is their designation of the Islamic Revolutionary Guard Corps as a terrorist organization joining the U.S. and Canada? How significant do you read into this designation?
I mean, it certainly helps in terms of applying a degree of extra pressure on Iran. But I mean, two things that must be said. Number one, the US did this almost 7 years ago. So really, there is definitely a constituency out there that is asking the question quite why it took 7 additional years for the EU to come to the same conclusion as the US administration, when it's been patently obvious that the IRGC has been involved in all sorts of things in that intervening period and before. And the second thing is that, Iran is already under significant economic pressure, and you've seen that with sort of a record low in its currency, real restrictions on trade. It's having to use this gigantic shadow fleet to get its oil out. Will this make any additional difference? Yes, perhaps some, particularly in terms of Iran's ability to place money around various jurisdictions. But, fundamentally, it feels very late in the day relative to, some of the actions that we've seen from the US.
And we still heard from the Iran foreign minister decrying that designation, though. Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, thanks so much for joining us. Let's take a quick look at where markets are trading right now. As we mentioned, quite a bit of news for markets to dissect. There is, of course, the major tech earnings that we got throughout the week. And also, of course, that potential next Fed chair nominee being named later today on Friday, as President Trump has alluded to. S&P futures, U.S. equity futures, both marginally down right now. Eurostock 50 futures, though, potentially looking like it might be a stronger day to start this Friday, up just about 0.6% there. All right, coming up, we'll discuss South African monetary policy as the central bank pauses its easing cycle. Casey Sprake, market strategist at AG Capital, is joining us next from Cape Town. Stick with us. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Warsh tipped Bloomberg understands the Trump administration is gearing up to nominate Kevin Warsh as the next Fed chair, with the U.S. president planning to make his announcement on his pick later today. Apple delivers record quarterly sales and a better than expected forecast as iPhone sales and a comeback in China drive revenue. Plus, oil tumbles following a 3-day rally as traders watch President Trump's shifting messages on a possible U.S. attack on Iran. It's just gone past 9:30 a.m. across the Emirates, 7:30 a.m. here in Johannesburg. I'm Jennifer Zapasaja in for Jumana Bersachi. And as we were just telling you there, quite a bit of news for the markets to dissect. But really, it seems like front and center is this potential next Fed chair pick that we will potentially get, as President Trump alludes to, later today on Friday. As we can see on the board there, we're seeing U.S. equity futures marginally lower today, although we've been speaking about this all week, this theme of tech spending on AI, of course, as we have gotten a number of the mega cap companies reporting, the latest being Apple. But still, we're seeing NASDAQ futures down just about 0.5% there. Kevin Warsh, potentially Kevin Warsh as the next Fed chair, also filtering into the U.S. Treasuries right now. The U.S. 10-year yield up just about 3 basis points to trade at about 4.2692 there. Of course, we are awaiting what that announcement does bring, but still seeing quite a bit of reaction in terms of Treasury, and also a stronger dollar, which is quite fascinating considering over the past few days what we had been seeing, and really a weaker dollar narrative filtering into the markets. Gold, spot gold there down just over 2.8% there, but still what we've been seeing a possible reaction precious metals potentially reacting to the next Fed chair announcement, having an effect on the dollar, as I mentioned, but also precious metals. But still, we're seeing gold at about $5,218 an ounce there. And just finally, we have Brent crude on the board, also down today about 1.15% there. Still, we should mention, though, Brent is still on track for its best month since July of 2023. That, of course, despite some of the concerns about oversupply to start 2026. But as we've been speaking about all morning, quite a bit of geopolitical factors filtering in to the markets. And, of course, squarely focused on what the U.S.'s intention is to do with Iran, as we were just speaking to our Stuart Livingston Wallace about that. But Brent crude trading at about $69.90 a barrel there. We should also mention OPEC Plus is meeting over the weekend, so I'm sure they're keenly paying attention to what we see from the price action. And really quickly, just want to bring your attention to this terminal chart. That is, of course, on the poly market odds of the next Fed chair. We have seen betting odds increasingly favoring Kevin Warsh, and he is potentially seen as a more hawkish contender. And as you can see there's been quite a bit of fluctuation as to who is leading in the poly market odds, but still his leaning towards potentially being the next Fed chair rising above 80% on Friday, as we did see support for Rick Reeder, who had been talked about quite extensively earlier in the month, fading there. So we will await that announcement from President Trump to come later on Friday. Let's check in, though, now on how markets in Asia are faring. Min Min Lo is standing by in our Hong Kong studio with more. Min Min, what are you watching?
Hey, Jen, we have this stock up here. This is one of the most read stories on the terminal earlier this morning, but New World Development, this is one of the most debt-laden developer in Hong Kong, said to be in advanced talks with Blackstone that is looking to acquire a stake in the company to become the largest shareholder. Now, this is according to sources, but it could provide a path forward for this beleaguered property developer, perhaps helping them avoid selling some of their most precious assets to shore up liquidity if they can attract cash-rich investors. So something to watch, because we can see here already the market is reacting with a 4% gain here. But of course, a turning point for the Henry Cheng family, the tycoon that owns this company. They have a 45% stake. They will have to give up quite a big portion of their company. Not clear yet what is the stake that Blackstone will be acquiring if the deal comes through. But here you can see the broader property market, though, really going in the opposite direction here. Big losses here across the board, reversing the gains that we saw yesterday. A pretty short-lived gain that we saw after local media reported that some developers no longer need to submit the 3 red lines indicators to the government. Those are metrics introduced by the government back in 2021 to prevent over-leveraging in the industry. But some analysts are saying that that is largely a symbolic move. Morgan Stanley as well saying that the gains, the outperformance could be unsustainable.
Fascinating stuff. Min Min Lo in Hong Kong for us. Min Min, thanks as always for that report. Let's turn to South Africa now. South Africa's central bank has paused its easing cycle, keeping the benchmark interest rate at 6.75% as inflation pressures ease and the rand strengthens. The decision was split, with 4 members voting to hold rates and 2 favoring a 25 basis point cut. Joining us now in Cape Town is Casey Sprake, market strategist at AG Capital. Casey, thanks so much for your time. As we were just mentioning there, leading into this decision, analysts were split, and then we ultimately did see this MPC split. What does that tell you about where we are at right now, potentially in the easing cycle here in South Africa?
I think it really shows that we're coming towards the end of the easing cycle, given the uncertainty and directions that we're finding at the moment, not just within the market, but within the MPC as well. So as you highlighted, the market had not priced in either outcome. It was sitting 50-50 between either a cut or a hold. And the fact that we saw that 4-2 split between the MPC goes to show that there's also not a unanimous decision. So from our side, we're viewing it at AG as the fact we didn't get a cut this month, but we're seeing a strong chance of a cut of 25 basis points in March.
But Casey, as we heard from Lesetja Kganyago, we still have this inflation target band, this new inflation target band, squarely in focus. What are the risks potentially? Because he did outline a few different scenarios that the MPC is looking at. What do you see as potentially the biggest risks to these scenarios?
I think at this point, the biggest risk is just the heightened geopolitical uncertainty that we're seeing at the moment and the uncertainty of how that's going to filter into the emerging market space, particularly for South Africa. At this point, our inflation outlook is fairly benign. The Reserve Bank is forecasting inflation to average around 3.3% this year, which sounds moderate. But bear in mind, we now have that new inflation target of 3%, and the Reserve Bank is cautious around how these sort of uncertain events are going to filter down into the inflation outlook for South Africa ultimately. At this point, we're seeing a strong boost from our terms of trade thanks to strong commodity cycle. The rand is strengthening strongly off of the back of dollar weakness, but we just don't know how these cyclical effects are going to play out just yet.
Yeah, let's stay on the rand, Casey, because you said that is in response to dollar weakness. Do you think that the strength of the rand, though, is not a South Africa story? Does it squarely focus in on what we've seen with the dollar?
Up until now, I think it's been a bit of a mix of the two. There has been a strong reform narrative in South Africa. We are getting a lot more on the local macro outlook that's been boosting the rand in that sense. But that's been mixed with sort of dollar weakness, with policy uncertainty coming out of the United States. However, I feel now as we're getting towards the end of this month, it's largely been a result of dollar weakness with uncertainty around the Trump administration and everything, again, we're seeing in the political environment there. So tilting a little bit more now towards the dollar weakness story.
Do you think we have seen the lowest level of the rand, or do you expect potentially some more strength?
Oh, that's the interesting question. You know, before we were saying we're going to hit around the 15.75 handle. We blew past that at the beginning of the week. So I think we have potential to actually see this strengthen quite a bit further towards a 15 mark, perhaps even under. There's a good few market pundits at the moment saying we could even hit the $14 mark. At this point, my uncertainty is just around how long these cyclical effects are going. Yes, it's been a fantastic boon for the South African macroeconomic environment at large. But again, a lot of this is very cyclical policy uncertainty. We just don't know how that's going to play out and how that's sort of feeding into our commodity markets, bearing in mind South Africa is an exporting nation.
Yeah, and of course, automobiles is part of that story. We've talked quite a bit about AGOA here in the office and the potential for South Africa to not be included in the renewal. When you think about trade and the factors that could affect the growth of this economy, how much is contingent on South Africa being a part of AGOA?
It depends on sort of the export lines that we're looking at. Quite topical at the moment is the fact that the South African government authorities are looking at perhaps not adding on up to 50% tariff on car exports, for example, from both China and India. That would be significant given the fact that the car manufacturing lines is a significant part of the AGOA trade agreement for South Africa. Bear in mind, the United States has put a 30% tariff rate on South Africa, and that is one of the markets alongside our agricultural sector that looks set to be hard hit. Hence why now we're seeing this policy uncertainty coming in from our own local authorities on how best to counter that. Unfortunately, the murmurings around that haven't gone down too well in the markets. There's a lot of concern that we're now hitting those tariffs and making ourselves even more uncompetitive in the grander scheme.
Is your expectation that we do need to hear from the finance minister on some definitive tax measures in order to potentially sustain some of the growth and the levels that we're at right now?
Yes, precisely. South Africa's main budget story is coming now in February next month. Up until this now, murmurings are, at the end of the day, just murmurs. We need to see hard, fast policies coming in from the budget, understanding where we'll be tracking for the next 12 months. At this point, we're looking at a fairly positive scenario around the budget. Spending has largely been constrained. And of course, South Africa's term of trade is extremely strong at the moment. We're receiving a lot of tax revenues coming in from our very strong sort of commodity cycle, thanks to our exports.
Casey, let's just finish on geopolitical uncertainty. The governor mentioned electricity and food costs, but I wonder how you think about oil and the oil story right now, especially with regards to what we're seeing in Iran and how that could filter through into the inflation outlook.
oil is extremely significant. Energy costs are one of the most volatile components of South Africa's inflation basket, and is one of the larger barometers that we monitor within the market space. At this point, again, oil costs filtering down into our energy costs here in South Africa have been extremely muted. That's why it's been keeping our inflation outlook fairly benign. But again, as you mentioned, the governor of the Reserve Bank noted a word of caution around that, given the geopolitical space, if we see tensions starting to heighten in Iran and the oil price take a bit of a spike from that, that will filter straight down into our inflation basket at quite a significant rate as well. Bearing in mind, we also have some local food inflation issues as well at the moment. And of course, the oil and energy costs filter down very strongly there in the second order effects.
So is it too early to say it is a Goldilocks scenario right now in South Africa? How would you characterize this point?
I would say it's very much a wait-and-see scenario at this point. Yes, things are looking incredibly positive, but there is risks are starting to tilt, I think, towards the upside now with all of this sort of going at play at the moment. So again, positive, nothing to worry about it just at this point, but I think a strong note of caution is needed just for the outlook, especially over the next few months.
Yeah, and weeks and days at this point. Casey Sprake, market strategist at AG Capital, joining us there in Cape Town. Casey, thanks so much for being with us this morning. And remember, you can find more stories like this from across the continent on a variety of our different platforms. You can subscribe to our Next Africa newsletter on the terminal and our website, listen to our podcast on Spotify and Apple, and you can watch our monthly special right here on TV and also on YouTube. Now, for a look at some of the other stories we are following from the region today. Nigeria plans to raise close to $2.9 billion from its domestic capital markets to settle outstanding debts owed to power companies. The program aims to clear legacy payment arrears and build a sustainable market. The government expects the debt settlement to free up generation capacity and stabilize power supply for registered customers. Gabon's government is in negotiations with the World Bank over a $500 million loan to support its economy. Bloomberg understands officials met with the lender this week, with further talks expected in Washington. The move comes as Gabon also looks to re-engage with the IMF after a funding program was suspended following the country's military takeover in 2024. African football's governing board has fined Senegal and Morocco after chaotic scenes marred the Africa Cup of Nations finals. Senegal was fined more than $600,000, while head coach Papa Thiaw was banned for 5 matches after ordering his players off the pitch. Morocco was also fined and had 2 players suspended as the fallout from the controversial match strained relations between the two countries. All right, coming up, President Trump says he secured a pause in Russian strikes on Kyiv and other cities as temperatures plunge across Ukraine. That story is next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. President Trump says he successfully appealed to Russia's President Vladimir Putin to halt strikes on Kyiv and other Ukrainian cities for a week. The move comes as Ukraine faces severe cold and power shortages due to damaged infrastructure from recent Russian attacks. For more, we're now joined by Bloomberg's Greg Sullivan. Greg, so President Trump says he has gotten this vow from Putin. What more do we know about their discussions and this announcement?
Well, most of what we know actually does come from President Trump, who said that he asked the Russian leader, Vladimir Putin, to halt strikes for a week on Kyiv. Russian officials have been pretty tight-lipped about whether or not they actually agreed to a truce, but Ukrainian President Volodymyr Zelensky did thank the president for his announcement. Now, over the past day and into today, we haven't seen a major strike on Kyiv, but I would note that Russia does often take a pause of a few days in between these massive barrages into Kyiv. Prior to this, Russia has been hammering Kyiv and other cities with missile and drone barrages. And in Kyiv alone, they've been facing a very cold winter, and they've actually left a lot of citizens, a huge swath of the population of Kyiv, without power, heating, water, so much so that the mayor has actually urged people who do have access to heated places in other cities to actually pick up and leave. So they've been hammering it. It does appear that, as President Trump said, there may be a truce on the table now amid all these negotiations.
And Greg, just considering all of that, there's been a bit of discussion about where peace talks stand, especially with U.S. administration officials meeting with President Putin. What do you know?
Well, the talks are happening, and they're happening in a three-way format. The participants, the warring parties, are meeting face-to-face, and they are expected to continue this weekend, though last night Steve Witkoff, the president's envoy, did say that the talks would continue in about a week. So it's a little unclear as to when exactly they'll take place. It's unclear whether progress is being made. The participants haven't really shared a lot of details. But one thing I would say is that the main issue, that of territory in Ukraine's east, does not appear settled. No side is saying that there's progress made on that. That is a major issue in this war, and it doesn't appear that the two sides are any closer on resolving President Putin's demand for that territory that Kyiv still controls in Ukraine's east. And with that outstanding, it's hard to see any kind of progress towards peace.
All right, still a lot to pay attention to there. Greg Sullivan in Dubai for us. Greg, thanks so much for your reporting. Now, here's a look at some of the other stories we are following. Abu Dhabi's government says it will create what it calls a sovereign investment powerhouse by consolidating the assets and investments of Elimad Holding and ADQ. Elimad burst into prominence last year when it joined others to back Paramount Skydance's hostile takeover bid for Warner Bros. Discovery. Wealth fund ADQ has a $263 billion portfolio, which spans everything from a stake in Sotheby's to Abu Dhabi airline Etihad. Mohammed Hassan Al Suwaidi is stepping down as CEO of ADQ to become executive chairman and managing partner at Lunate. This is as the $115 billion firm seeks to more than double assets over the next 5 years. Lunate says Al Suwaidi oversaw significant growth at ADQ, and his ability to build at scale and drive growth will be critical as the firm continues to accelerate its development. And Saudi Arabia's state-run SPA says the kingdom has launched the national privatization strategy to strengthen the private sector. It says the shift marks the completion of a privatization program launched in 2018. The strategy includes 5 main programs to advance the privatization ecosystem and targets 18 sectors. All right, coming up, SpaceX is said to be considering a potential merger with Tesla or XAI. More on our Bloomberg Scoop next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Bloomberg has learned that SpaceX is considering a possible merger with Tesla or an alternative combination with Elon Musk's XAI startup. Bloomberg tech co-anchor Ed Ledlow broke the news and told us more about what could happen next.
There are 2 distinct scenarios being looked at. My understanding from sources is that there has been a consideration by SpaceX of a merger with Tesla, and the companies have looked at the feasibility of merging private SpaceX with publicly traded Tesla. Alternatively and separately, SpaceX has held talks with XAI, Elon Musk's AI lab, the maker of Grok, about a combination of sorts. And, you know, the only thing to add to that really is that there is a body of investors, I understand, that have pushed the Tesla SpaceX option. As you know, like, the background context is that we've reported SpaceX is preparing for an IPO targeting the middle of 2026 this year, in the hope at raising funds far beyond $30 billion, $40 billion, $50 billion, because they need capital to buy GPUs for space-based data center. Historically, like, it's completely normal for different Elon Musk companies to work with each other. There have been engineers that have worked on materials, for example, at both Tesla and SpaceX. XAI uses energy products from Tesla. As of this week, Tesla is an investor in XAI. It bought $2 billion of preferred equity in the Series E. SpaceX is an investor in XAI. It has participated in a prior round as well. So these are being looked at. Nothing is final, but both options are being looked at. This is Ed Ludlow for Bloomberg News in San Francisco.
Ed, thanks for that report. Let's just take a quick look at where markets are this Friday. Ed was just talking about one of the themes throughout the week, which has been all about tech. But now, as we start the Friday session, the last trading day of January, quite a bit of focus on potentially the next Fed chair to be announced later today. Our reporting suggests potentially it could be Kevin Warsh, and the market's really trying to dissect that. As we can see there, U.S. equity futures marginally lower today. We are seeing the dollar gaining and gold sliding. Eurostock 50 futures, though, looking like potentially starting in the green on this Friday. Eurostock 50 futures up just about 0.6% there. That is it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Stick with us for Daybreak Europe. This is Bloomberg.